9 months of inventory. The Greater Vancouver Real Estate Board is sitting at over 9 months of inventory at the end of September in 2025. I'm Christine Copper with Sotheby's Realty, and if you've been following me, you know that that's a heavy buyer's market territory. 6 months of inventory and above is considered a buyer's market. 6 months of inventory and above is considered a buyer's market, and we've been in a buyer's market since July of 2024. So you might be wondering what's happening in the market today. So let's dive in and get through all of the September numbers and a little bit of an update on the rest of the Greater Vancouver real estate market. So for those of you that follow me every month, I go through this table because it gives us a quick snapshot of what's happening in the real estate market in Greater Vancouver. This goes from Vancouver all the way out to Maple Ridge. It doesn't include the Fraser Valley market, just as an FYI. So we're focused 100% on the Greater Vancouver market. Let's dive in, rock through these numbers, give you some context, and then go into some more details. September finished off the month with 1,875 sales. That's down 4% month over month, but up year over year. So interesting stats. However, I'm not surprised. August is typically the quieter time of the year. It's that last month of summer that everybody tries to take off. And year over year, we're up slightly, which is a very interesting note about September. Now, one thing I did want to mention is September is the month that it starts the fall market. This is the second busiest time of the year, and the activity is muted. However, having said that, we saw the same thing last year, and then we saw sales take off into the 24 to 2600 range in October, November, and December last year. So we have yet to see what happens. If sales continue to remain muted and the listings continue to come on, anticipating that fall market, the second busiest market of the year, then we might see even more downward pressure on prices. However, if they start to tick up and start to chew away at some of that excess inventory, then things will probably stabilize. However, you can see that the trend has been fairly slow and steady, but with moderate upticks throughout the year. Now, one of the numbers I really like to take a look at is the 10-year average. How does September sales compare to the 10-year average? They were down 20% below the 10-year average. However, this time last year, we were down 26% below the 10-year average. So it shows that we are still in very muted demand side of the equation. However, we are doing better than we were last year, but nonetheless, it is weak activity overall. We've never cracked over 2,300 sales in any month this year so far. So the question is, will we see that this fall, or are we going to continue to see low sales bumping between 18 and 2,200 as the year goes on? New listings clocked in at 6,500. That's up 54% month over month. Not surprising, given that you're coming off August, and up 6% year over year. So a bit more inventory or new inventory coming on in the month of September compared to last month. That is up 20% above the 10-year average. So more listings coming on than usual. And compared to last year, we were only up 17% over the 10-year average. So while we're slightly better on the demand side of the equation, we're also slightly higher on the supply side of the equation. And when it comes to overall listings, we're now sitting at 17,079 homes available on the MLS at the end of September. That was up 5% month over month, up 14% year over year, 36% above the 10-year average. So it just goes to show we are still sitting in a very excess supply side of the equation. If you've heard the real estate industry talking about over the last few years, is that it's not just about demand, it is about supply. And we definitely have more supply than we ever had in the last 10 years available for sale in the Vancouver market. And again, it's more than it was last year. So in 2025, the story is just overall more inventory and less demand, and a significant lower amount of demand for our real estate, creating this downward pressure on prices. Now, This is not surprising given the fact that in 2025 and 2026 are the two highest years of the mortgage renewals into this higher interest rate environment. You may have heard of it called the renewal cliff that a lot of people were scared about. That point in time, in my personal opinion, into this extreme high interest rate environment has passed when clients were buying or renewing into 6+% interest rate environment, which was over a year ago. But the volume of mortgages turning over in this lower rate environment still higher than they were than the rock bottom rates in COVID. Now we're sitting at about 4% versus, 2% is much more manageable than it was when you were renewing into 6% interest rate environment. The volume of mortgages that are renewing into this environment is still extremely high. And it's not that people can't necessarily afford those mortgages. It's just that for the investor segment of the market, which I would like to reframe the investor market, it's the mom and pop owners of real estate that provided rental housing to our people because the government had not been providing rental housing since the 70s. The last time they were involved in stimulating and creating housing was the 70s and 80s and that sort of thing, and then later turned it on into the private sector, which is then your mom and pop investors or developers. So we can't really criticize them for buying and renting out homes because without them we wouldn't actually have any supply until now. The challenges where we are today in turn of like, why do we have so much supply and why do we have so much inventory coming on the market? Well, I think a big factor is that the numbers don't pencil. The private sector doesn't build or invest in creating homes that don't provide a return on investment, just like you wouldn't go out and buy a home and then rent it to someone and then, have to subsidize the rent every month because of all of your costs, which is how it works essentially. And so we don't have that investor market in the segment anymore. So that demand's not there. And then those properties that are rolling into this new environment where rents are lower, so your revenue's down and your expenses are up, including your interest payments on your mortgage, as well as just overall taxes and insurance and etc. It doesn't make sense to hold on to these properties anymore. And you're seeing a lot of that come to market. I think that's one segment of why we see so much more inventory. There is also less immigration. As we know, we've had some very questionable immigration policies that really stimulated the demand side of the equation. And now that has been toned down and we're just not seeing as much demand. And of course, the affordability piece is another factor where it's just expensive to own homes in Vancouver. And you have to have enough income to be able to qualify or have been in the market or have some kind of help to enter the marketplace if you're not in it already. If you were fortunate enough to get into this market 10 years ago, then you're still ahead with your equity. Anyhow, point is we're seeing a lot of inventory come on the market and it's accumulating over time. And then just the demand side's just not there, which I think were all the government policies or many government policies that the voters had voted for. They, voted governments that wanted to see taxes and anything they could really do to slow down the demand to help lower housing prices, which is exactly the effect that we're seeing, as that is a big part of the equation, whether it's taxes, immigration policies, and just all the economic reasons why people would want to be in Vancouver and or Canada. And a lot of that's shifting, and we're seeing a lot of people moving out of BC and into other provinces or into other countries. And in addition to that, we also still have things like the foreign buyers ban and the foreign buyers tax. And remember, there's different ways of looking at foreign investment, right? I think a lot of people in the media have done a really good job of pigeoning foreign investment and foreign buyers as these people who don't live in this country who buy, 1, 2, 3 condos and all cash, and then they just let them sit there, or they turn them over and into, keep raising the rents to increase the incomes, and they really have like no ties or they don't do anything in our marketplace. But we actually have foreigners that are people like Americans who currently they're looking at their political situation going, you know what, I'm an educated person, perhaps I'm a doctor or a highly skilled person or an entrepreneur or a business person. I'd like to move out of my country and go to another safe, stable environment. But unfortunately, we don't allow those people to enter our country. So, or they can, but they're not not allowed to own real estate here. And for that segment, typically they want to know that they can actually own their real estate versus renting real estate. And so it's just some of these layering policies that, have helped create the result that the votership was seeking. Therefore, if you're considering getting into the market, it could be an excellent time. So 17,079 homes is the total amount of homes available on the Greater Vancouver board at the end of September. That was up 5% month over month. Sellers coming on in anticipation of the fall market, and up 14% year over year. So we definitely have more inventory this time than we did last year. And just to give you an idea of in context, because year over year doesn't always give you the complete picture, we're up 36% above the 10-year average for inventory. So finally, we have that supply that everybody's been hoping for. And you can see that it's substantially higher than it was last year when we were only 24% above the 10-year average. Months of inventory. Why do I love months of inventory? Because it is a precipice, or it gives you an idea of what's coming next for prices. Between 4 and 6 months of inventory is considered a balanced market. 6 months and above is considered a buyer's market. Why? Because it would take 6 months of sales to get through all of our inventory, and therefore there's a lot of inventory putting downward pressure on prices. In this case, we're hitting 9.1 months of inventory at the end of September. We have not had this much inventory except for in the months of December and January of 2019 going into 2020. It was a difficult time. Prices really came down. What's interesting about that is, besides that point in time, we hadn't had that much inventory, like months of inventory, since the GFC. So it gives you a really good idea of what's happening in the marketplace. Another interesting point is that shortly thereafter, so December, January of 2019 were the months of where we saw over 9 months of inventory. And right after that, by March, COVID came along and we went straight back into a seller's market and only had 4 months of inventory. There was a lot of demand. The psychology was quite positive at the time prior to COVID. And slowly but surely, the demand came back, chewed through that inventory, and the market did flip around. Are we going to see such a quick, dramatic shift in the market psychology this time around? I would argue not so much. The dynamics have changed. The overall structural situation has changed. Not only do we have excess inventory on the resale market side, but we also have excess inventory of unsold brand new condos sitting out there, what developers need to sell and get off the books. And at the same time, because they're having such a hard time selling these newly built condos, they're starting to either shelve, like not proceed, or cancel projects that just are no longer economically viable. So in my personal opinion, I think we're going to be sitting in this marketplace for a while, given we have a lot of inventory, and we're going to continue to have more inventory from the resale side, as the numbers don't really make a lot of sense. And we are still going through this massive renewal turnover, and anyone that was an investor is probably, strongly considering letting go of those homes because they just don't financially make sense. Now, benchmark price is sitting at 1.142 million. That's down 1% month over month and down 3% year over year. We've been chipping away at this benchmark price. So one would say that it's been fairly stable in the marketplace, but I would say after you have 10 or 12 months of 1% decreases, now you're down 10 to 12% over time. So we haven't seen full 1% decreases necessarily every month. My table here is rounded up. Sometimes it's 0.4% decrease, sometimes it's a 1.3% decrease. But the fact is prices are being eroded away slowly but surely in most segments.